Hello, my name is Steve Carlisle from Clearly Training, and you're watching the first in our Finance for Non-Finance Managers video series. So this is a series of videos for managers. You might be a manager, you might be a director, you might just be an employee, but you might be running your own company. Yeah, you might be doing that. And you just want to know more about finance. You want to know more about the world of finance, more about how things fit together and what the terminology means. So this is our first video, and today I'm going to be talking about why we have financial statements and what the financial statements are. Oh, by the way, I'm assisted here, standing behind the camera, you can't see him, is Charlie, and Charlie's going to put up some little reminders for you of the things that I say to help you follow the video. So, first thing, I'm going to talk about what do financial statements tell us, or financial statements or accounts. Those two phrases mean the same thing. And actually, there's a lot of phrases in finance and the world of finance that actually mean exactly the same thing. And when we come across some of those, I'm going to tell you what they are. So the first one is accounts. Financial statements basically mean the same thing. Financial statements is just a fancier term to mean exactly the same thing. So what do we get in a set of financial statements, and what do financial statements tell us? Well, the first thing is, and Charlie's probably going to pop this up right there, I would guess, just about there, Charlie, yeah? The first thing is financial statements tell us about performance. And that's the first thing, and it's the most important thing. So performance means how have we performed over a period of time. So that might be a month. So how have we performed from the beginning of the month to the end of the month? Or it might be a quarter, from the beginning of the quarter to the end of the quarter, or it might be 6 months, or it might be a whole year. We want to know how we've performed. The performance means what have we earned, what is our income in that period, and what have we incurred. And of course, what we've earned, less what we've incurred in costs, gives us our profit or loss. If we've earned more than we've incurred, we've got a profit. And if we've incurred more costs than we've earned, then we've got a loss. Oh, never mind, yeah? So that's the first thing, the most important thing that financial statements show us. And the second thing that they can show us is our position. Our position, where were we at a particular point in time? So position is a destination, where we arrived, yeah? So financial statements tell us where we are right now. In terms of what? In terms of our assets and our liabilities. Assets are things you own, and liabilities are things you owe. So second thing we need to know about an organisation is what is its position, what is its financial position in terms of its assets and liabilities. And the third thing that those financial statements tell us is they tell us about the liquidity. And it's a funny phrase, liquidity. I suppose it's the first technical phrase. So liquidity is all about the amount of cash you've got. How much cash do we have, and how much cash do we have to pay out in the short term? And how much access to future cash do we have? That's the third thing that we'd like to know about a business, because businesses need cash to survive in the short term. We need to be able to pay our bills and our wages, yeah? We need to be able to pay ourselves if we own the business. Okay, so let's move on now and look at actually what we call those three different views of the business. Okay, let's have a look now at the names that we give to these three statements. So first of all, we've got this statement of performance. That's actually got a number of different names depending on where you are, depending on whether you're in the private sector or whether you're in the public sector, whether you're in the UK or whether you're in the US or China, wherever you are, it has different names. So the most common name, colloquial name, I suppose, is the profit and loss account, sometimes abbreviated to the P&L. Secondly, the statement is also known as the income statement, and it's the same thing. It doesn't just show your income, by the way, it shows your income and expenditure, but it's often referred to as the income statement. And certainly if you're a large business, a business quoted on a stock exchange anywhere in the world, then you will call it an income statement. And the third name, usually used by the public sector, is the income and expenditure statement. Sometimes if you produce a profit and loss account or income statement internally and you show it to your managers, and you show your managers so that they can track their performance, you show them their own version of the profit and loss account, it's known as the management accounts. Okay. And the profit and loss account or income statement is a little bit like a video, so it shows what's happened from the beginning to the end of a period. Yeah? It shows what income and expenditure you've had during that period. The statement of position is called the balance sheet, and that shows your assets and liabilities at a particular point in time. So it might show what your assets and liabilities were on the 31st of December, if that's the date that your financial year ends, or what your assets and liabilities were on the 31st of March, if that's the date your financial year ends. You can produce a balance sheet at any point in time. And what it shows you Hey, and this is interesting. It's a little bit like a photograph. And it's sometimes known, the balance sheet, as a snapshot in time. It's like a photograph. It's like a financial photo of your business. And it shows you the assets and liabilities you had at that one particular point in time. And just like a photo, it's always out of date. As soon as it's taken, it's out of date. You might look back at photographs of yourself from 10 years ago and you look completely different now. Same with a balance sheet. If you prepare a balance sheet on the 31st of December, by the 2nd of January, the assets and liabilities you have will have changed. So we often refer to it as the snapshot in time, the balance sheet. One other thing about the balance sheet, it also has another name. This other name is the statement of financial position. And certainly if you are looking at the financial statements of a quoted company, a company that has its shares quoted on the stock exchange, it will call its balance sheet the statement of financial position. Just a different name for the same thing. The third statement, and probably the least important from our point of view as accountants, is the cash flow statement. The cash flow statement is very simple. It just shows the cash coming in and the cash going out. It's like a video as well. It shows what's happened from the beginning of the period to the end of the period. But it shows what's happened in terms of the cash receipts and payments. So let me just have a look at those three things, just to recap. A profit and loss account, first of all. Profit and loss account shows income and expenditure. Charlie? It shows the difference between the income and expenditure. If you've got more income than expenditure, you've got a profit. If you've got more expenditure than income, you've got a loss. Really important thing about the income and expenditure statement. Hey, and I'm going to talk about this in the next presentation, the next video. The income and expenditure statement is prepared using the accruals principle. Funny word, the accruals principle. I'm going to tell you all about that in the next one. Have a look at that one, really, really important, fundamental for understanding what makes a set of accounts. As I say, the profit and loss account has many names. It's also known as the income statement, the income and expenditure statement, and when organisations produce them internally, it's known as the management accounts. Just a quick recap on the balance sheet. The balance sheet shows assets and liabilities. Things you own, which are assets, and things you owe, which are liabilities. Just change one letter. Things you own and things you owe. And it shows the difference between the things that you own and the things that you owe. It also shows your funding. What do I mean by that? The funding, where does your money come from? So usually the money might come from the shareholders. I'm going to talk more about that in one of the later videos. Have a look at Balance Sheet 1 video if you're interested in that. So it shows the funding, where you've got the money from. It also shows the reserves that you've accrued, that you've accumulated over time since you started business. Have you accumulated any reserves? And I'll talk about how you accumulate reserves again when you have a look at that balance sheet video. Finally, the balance sheet has also got another name. It's called the Statement of Financial Position. That's a more modern name, and certainly all the large businesses in the world use that name. Okay, lastly, we'll have a look at that cash flow statement. It's a very simple statement. It shows your receipts and payments, what you've received and what you've paid. And listening to that, you might think, hey, that's like my bank statement. My bank statement shows that. And yeah, it does. Yeah, because the cash flow statement is basically a bank statement for the business. It shows the cash coming in and the cash going out. And it also shows what you had at the beginning and the end of the period, just like your bank statement shows. It is a very simple statement. It's essential to a business that they've got enough cash, as we'll talk about later on when we look at cash flow and liquidity and working capital. There's another video on that. Hey, there's loads to watch. And basically, that's all I want to say for this video. So have a look at the others, have a look at the other ones, have a look at the accruals one, and the profit and loss one, or the balance sheet one. Have a look at the liquid, have a look at all of them. They're fantastic. All right, I'll leave you there. My name's Steve Carlisle from Clearly Training. Thank you. Bye-bye.